Hey there traders, thanks for joining me. This is Jeff from thestockbandit.com, and in this video I just want to discuss gaps on the chart. And we often know as traders that the stocks and the indices will gap pretty often. Sometimes we get those very common gaps which are very incremental and they tend to fill very quickly. Sometimes we tend to get major gaps which stay in place for weeks, sometimes months before they eventually get filled. But largely most gaps tend to fill over time. And so in this video I just kind of want to talk about a question that I get asked a lot, which is once a gap gets filled, then how do you treat the stock? So let's take a look at Cisco Systems here, which is CSCO. And back here during May, this thing gapped. On the 9th it closed at 1878, and on the 10th it opened the next day at 1720. So this thing saw a very significant gap which remained largely in place for a number of months. And in fact, as I just kind of extend these lines here, we can see that price eventually started filling that gap. By the way, it was a downside gap initially. We saw the stock really flounder around for a period of a few months. Then we saw another gap right here in August to the upside, which kind of left this whole zone down here stuck on its own. So price gapped higher, back above, and actually filled that slight gap before there. Then it moved around here. We saw lots of fluctuation here in price, but no real continuation to the upside. Instead, this thing started to fill that gap during right here, late September, and we saw another minor gap here which got quickly filled, and eventually over the last couple weeks we've seen this thing come all the way back down and fill the remainder of that big void that had been on the chart. So now how do you view it? Well, now that all these gaps have been filled in and there's no remaining voids on the chart, what I do is I just zoom in a little bit closer and I look at the more recent price action, because now I can ignore those unfilled gaps. That business has been taken care of, and now it's back to the more recent price action, which in the case of this stock, Cisco, is a series of lower highs and lower lows as this thing has been coming under pressure and every bounce is getting sold. So here's a stock that may be in the process of trying to find some support here over the past few days, but all in all it's been actually pretty weak here and needs more time to develop a solid base or to indicate that it's really showing a change of character. Today we saw the stock rally, but I really would be more inclined to sell this thing on a further breakdown through support as it retraces more of this move right here. But when you look at a chart and you see a big unfilled gap, the larger the gap, the more time it should take to fill. But once it's been filled, then you can turn your attention back to the more recent price history. That's what's going to be giving you the best indication of where that stock is headed and who's really in control of it. Thanks for joining me for this video. I will have more for you soon, but in the meantime, trade like a bandit.